Okay, so imagine this. What if I told you that you could own a piece of the absolute biggest, most profitable companies on Earth? And no, you don't need to invent something in your garage, and you definitely don't need to work your way up some cutthroat corporate ladder. You just put your money to work. Literally, you could own a tiny, actual slice of the company that made the phone you're probably holding right now or the cars driving down your street. Sounds totally unbelievable, right? Like, no way it's that easy? Well, that is exactly what the stock market does. So welcome to today's Explainer, where we're going to demystify one of the most powerful wealth-building systems ever created. Let's dive in.
Here's our game plan for today. We'll start with the great wealth misconception, then we'll strip it down. What exactly is a stock? We'll step inside the stock market, figure out why prices actually move, look at how investors build wealth, and finally, we'll tackle the reality of investing versus gambling.
All right, Section 1, the great wealth misconception, separating myth from reality. Look, if you've ever felt completely overwhelmed or just straight up skeptical about the stock market, trust me, you are not alone.
There's this huge gap between what people think the market is and what it actually is. You hear these myths, right? That it's just a giant casino where you pick random letters, cross your fingers, and hope you hit the jackpot. Or maybe you think it's this exclusive VIP club strictly for the ultra-rich. But honestly, the reality is completely different. The stock market exists for a deeply logical, super practical reason. It's a fundamental wealth-building tool. And once you see it that way, it kind of changes everything about how you look at money.
Which brings us to Section 2, what exactly is a stock? The atomic unit of ownership. Let's ditch all the scary financial jargon and just look at the absolute foundation here.
Picture a local bakery. It's doing amazing. People are lined up down the block, pastries are selling out every single morning, and the owner realizes, hey, we need to expand. But expanding costs money, right? Rent, new ovens, hiring staff. Let's say it's going to cost a cool $1 million. Now, the owner could just go beg a bank for a loan. But another really brilliant option is to chop the company up into tiny pieces and sell some of that ownership to raise the cash.
And boom, that brings us to our definition. A stock is literally just a share representing partial ownership in a business. That's it. The bakery gets the money it desperately needs to grow, and the people who bought those shares, the investors, get actual ownership in return. You are literally a part owner of that bakery. It's a total win-win exchange.
Section 3. Inside the stock market, scaling up to billions. So, take that bakery concept and let's supercharge it to understand the global financial system.
When a massive company wants to build, say, a global factory or launch a revolutionary tech product, they need a ton of money. So they go to the public. This is called an initial public offering, or IPO. It's that exact moment a company first offers its shares to everyday people to raise massive amounts of capital. But here's a question. What happens the day after that IPO?
This is the twist most people totally miss. Once the IPO is done and the company has its money, everyday trading is just between investors. The company itself is totally out of the loop. If you buy a share of a major tech giant on a random Tuesday, you're not actually giving your money to that company. You're buying that ownership stake from another regular person who just decided they wanted to sell. The whole stock market is really just a massive marketplace where buyers and sellers swap these ownership shares with each other.
But you can't just have millions of strangers shouting at each other on the street trying to trade shares. That would be absolute chaos. Enter the stock exchange. Think of it as a highly organized, heavily regulated marketplace. It brings together all these buyers and sellers, enforces the rules, and gives you total transparency so you always know exactly what a share is selling for at any given second.
And because we have these organized exchanges, we get this awesome thing called liquidity. Now, liquidity is just a fancy Wall Street word for how fast and easy you can turn your stuff back into cold, hard cash. Because there are literally millions of people trading on the exchange, you can usually sell your shares in the blink of an eye if you need your money back. And that safety net? That's exactly why everyday people feel confident putting their hard-earned money in the market.
Moving on to Section 4, why stock prices move. Understanding the scoreboard.
A lot of people think some CEO wakes up, drinks their coffee, and just decides, our stock price is $50 today. Yeah, no way. Prices are actually set by this endless tug of war of supply, demand, and what people expect to happen in the future. Let's say a company makes $10 million right now, but they're launching a killer new product. Investors expect those profits to double, so demand shoots up, nobody wants to sell, and the price naturally rises. On the flip side, if the company is losing customers, expectations crash. Everyone rushes to sell, demand drops, and the price falls. It's not arbitrary math. It's literally a real-time scoreboard of human expectations.
Section 5, how investors build wealth.
the reward. So, if prices can actually go down, why not just bury your cash in the backyard or leave it in a super safe savings account?
Well, because your cash under the mattress isn't really growing. Historically, investing in productive businesses gives you way higher long-term returns. You basically get rewarded in two ways. First up, capital appreciation. If the business grows and becomes more valuable, your piece of the pie, your share price, tends to go up. You make money. Second is dividends. This is amazing. Some profitable companies will literally take a chunk of their profits and just hand it directly to you, in cash, just as a thank you for being an owner.
But the absolute real magic here, it's compounding. This is when your investment gains start generating their own gains over time. It's like a snowball rolling down a hill. You earn returns on your original money, sure, but then you earn returns on last year's gains and the gains from the year before that. Over decades, this snowball gets massive. Beginners always stress about finding the perfect stock, but honestly, your most valuable asset, it's just time.
All right, Section 6, Investing versus Gambling. Let's look at the reality here.
We need to kill this myth right now, the idea that investing is just gambling in a fancy suit. Look, in gambling, the math is literally rigged so the house always wins. Over time, the average gambler is mathematically guaranteed to lose. It's a zero-sum game. Investing? Entirely different beast. You are buying ownership in real, productive businesses. These companies are hiring people, inventing stuff, solving real problems, and making real profits. Your wealth grows because actual economic value is being created. Sure, if you blindly chase some crazy internet trend and panic sell 2 days later, yeah, that's speculation. And that is kind of like gambling. But true, patient investing, fundamentally different.
And here's a little secret most people don't realize. The market isn't just a bunch of day traders chugging energy drinks in their basements. The vast majority of the market is actually driven by massive institutions. We're talking pension funds, mutual funds, insurance companies. They manage trillions of dollars for regular people's retirements. And they are doing hardcore math and rigorously analyzing these businesses, not just rolling the dice.
Now, a quick timeout here. Does a rising stock market automatically mean every single person is getting richer at the exact same time? Well, not exactly. The stock market and the everyday economy are closely related, but they aren't identical twins. Sometimes the market drops even when the economy looks great right now, simply because investors are worried about the future. It's a complex relationship, but you gotta look at both.
But when you zoom out and look at the big picture, it's actually this beautiful, logical ecosystem. Companies get the cash they need to innovate and build the future. Everyday investors get to hitch a ride and participate in that wealth creation. And the whole global economy benefits because money is efficiently flowing right into productive, growing ideas. It's capital meeting human ingenuity.
So, I want to leave you with this one foundational thought. Behind every ticker symbol is a real business. Next time you see those red and green numbers flashing across a screen, remember, they aren't just random math. They represent real companies, with real employees, building real products. Once you grasp that stocks are just actual ownership, the market stops being this intimidating casino and becomes an incredible tool for your own financial growth. So, if every ticker symbol is a real group of people building the future, the only question left is, which pieces of the future are you going to own? Thanks for hanging out with me for this explainer, and I'll catch you in the next one.